believe that we are likely at or near the peak rate for this cycle. Participants didn't write down additional hikes that we believe are likely.
That was the Federal Reserve Chairman who, just as you heard, said today, we probably won't be seeing any more interest rate increases. We have hit the peak.
That means the interest rate will stay the same at 5.25% to 5.5%, at least for the next 6 weeks. But that's not all Chairman Jerome Powell said today. He also confirmed the Federal Reserve is thinking based on how they believe the economy has reacted to the dramatic increase in interest rates and how it will likely behave as we move forward. They could actually cut the interest rates 3 times in 2024, possibly 4 times in 2025, and then ultimately get the interest rates below 3% by the end of 2026. Now, for those of you struggling with these high interest rates, trying to get a home or maybe trying to get a loan, that's probably some welcome news for you. So why is it happening, and how will the Fed handle these interest rates in the future? Here's the Fed chair.
We are seeing, strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. We can't know. We still have a ways to go. No one is declaring victory. That would be premature, and we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not.
Raising interest rates 11 times since March of 2022 has obviously slowed down the economy and decreased inflation from its peak in June of 2022 of 9.1%. And that's exactly what the Fed's Goldilocks goal was, to achieve the so-called soft landing, where inflation would come down without automatically triggering a recession. Now, the Fed chairman says we're never out of the woods when it comes to a possible recession, but as of today, he says we're nowhere near one.
There's little basis for thinking that the economy is in a recession now. I would say that. I think there's always a probability that there will be a recession in the next year, and it's a meaningful probability no matter what the economy is doing. So it's always a real possibility. And there are certainly risks. It's certainly possible that the economy will behave in an unexpected way. It has done that repeatedly through in the post-pandemic period. Nonetheless, where we are is we see the things that I mentioned.
And lastly, I want to reiterate something that I have said many times in the past, and it's specifically for those of you who always want to keep saying, oh, they're doing this because it's an election year. First of all, when it comes to the Fed, that doesn't make any sense, because during the election year of the midterms of 2022, the Federal Reserve was in the midst of an enormous interest rate hike, jacking up the rates by several points. And also the fact is, while the Federal Reserve is a government agency, it is non-political and independent. The Federal Reserve Board does not have to get approval from the president or Congress to hike or cut interest rates. They don't run for election. They do what they want. But if you want to be technical and political about it, Jerome Powell, the chairman of the Federal Reserve, who you keep hearing from in this story, was actually appointed by former President Trump, and then President Biden decided to keep him on. Regardless of all that, the Fed chair was asked today how the 2024 election may or may not play a role in what's going to happen with interest rates next year.
We don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute we start thinking about those things, we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time when we think is the right time. That's what we'll always do.